Hey everyone, welcome back to Corporate Decoder. Today we're diving into Seacoast Banking Corporation's proxy statement. It might sound boring, but trust me, there are some secrets hidden in these documents that are more interesting than your grandma's secret cookie recipe, especially when we talk about how much the top dogs get paid. This proxy statement is basically a guide for shareholders on how to vote on important company matters at the annual meeting in May. Think of it as a school election, but with way more money involved. If you want to dig in yourself, you can check proxyvote.com. They are holding the annual meeting at the Hutchinson Shores Resort on May 19. In the letter, the chairman and CEO, Charles Schaefer, talks about a strong 2024 with a net income of $121 million. That's like saying they had a pretty good year at the casino. They also made some investments, hiring new bankers and expanding their product offerings, which led to loan growth. But remember, everyone puts their best foot forward in these letters, so let's check the facts. Time to break down what we're actually voting on. First, we're electing 4 directors, then they want to increase the number of authorized shares of common stock, which is like asking for more monopoly money. They also want to increase the authorized shares under their incentive plan, meaning more stock options for employees. Then we get to vote on whether we approve of the executive pay. This is the say on pay vote. And finally, we get to decide how often we vote on executive compensation, every year, 2 years, or 3 years. And of course, we get to ratify the appointment of their independent auditor. Spoiler alert, the board recommends you vote for almost everything. They always do. We will keep this in mind. Shareholder support for executive pay was at 97% last year. That's almost a unanimous thumbs up, indicating shareholders were happy with how the executives were compensated. Were they though? Keep that in mind. Okay, let's refresh our board with new talent. Over the past 12 years, Seacoast has brought in new directors with a broader range of experience. They've added 8 new directors since 2013. Board want diversity in making, bring in one diversity and experience, which is important for good decision making. Seacoast is big on corporate governance, meaning they have rules and practices to ensure the company is run ethically and in the best interest of shareholders. They have 5 board committees: audit, compensation and governance, corporate development, enterprise risk management, and information technology. Each committee has specific responsibilities to oversee different areas of the company. The audit committee is responsible for overseeing the company's financial statements and internal controls, ensuring everything is accurate and above board. It is made up of independent directors. On the basis of these reviews and discussions, the committee recommended that the board approve the inclusion of the company's audited financial statements in the company's annual report on Form 10-K for the year ended December 31 to Migori for the year ended December 31, 2024. That means they're confident in the company's financial reporting. Time for some inside baseball. Here's who owns what. Our directors and executive officers as a group beneficially own approximately 1.6% of the outstanding shares of common stock. That could be better. Also, BlackRock Inc. owns 14.7% of outstanding shares. The Vanguard Group owns 7.4% and State Street Corporation owns 5.3%. Having big institutional investors means they have more power to influence company decisions. All directors and executive officers complied with Security and Exchange Commission ownership reporting rules, except for some late filings. It's not a major red flag, but it's something to note. Meet the team. There is Charles Schaefer, Chairman and CEO, Tracy Dexter, Chief Financial Officer, Joseph Valenza, Chief Risk Officer, Juliette Kleffel, Chief Operating Officer, and Austin Carroll, Chief Lending Officer. They're about to get paid. Let's take a look. Now for the juicy stuff, executive compensation. This section explains how the company pays its top executives. The goal is to align executive pay with company performance, so they're motivated to do well. In 2024, the say on pay proposal received 97.2% support, which shows shareholders are generally happy with the executive pay structure. However, the committee still reviews it. Here's where we see the actual numbers. Charles Schaefer, the CEO, got a salary of $965,500, a 3% bump from last year. Tracy Dexter, the CFO, stayed the same at $475,000. Juliette Kleffel, the COO, however, got a 16% raise due to her promotion. The short-term incentives bonuses were also paid out in cash in 2025. GALs are return on average tangible assets, customer acquisition, and earnings per share, with Axilla 15% qualitative adjustments. Not bad, but how did the executives do against these targets? Well, Schafer received 1,206,875 TAS and TOD incentives. Dexter made 403rd made $344,000 and so on. Nice. In addition, there is long-term incentives awards in the form of stock options and some time-based restricted stock. It's good that company has a policy prohibiting our employees, including our executive officers and directors, from purchasing any financial instrument that is designed to hedge or offset any decrease in the market value of our stock. All directors, director nominees, and executive officers of Seacoast as a group, 16 persons, beneficially owned approximately 1.6% outstanding shares of common stock. It can be higher, but it's fine. The Audit Committee is composed of 5 directors: Dennis Oksinski, Christopher Fogel, Marianne Goebel, Robert Lipstein, and Alvaro Montserrat. In 2024, board and committee evaluations were individually conducted to assess the effectiveness of the board and committees of the board. I always wonder how truthful are these. A total of 9 of our 12 directors are considered independent. Our chairman and CEO is the only member of management who serves as a director. They try to look independent at least, which I consider good practice, better than nothing. The Compensation and Governance Committee and our Chief Risk Officer share the view that our incentive strategies strike the right balance between risk and reward. Also, they're trying to do long-term compensation plans over short-term to avoid short-term thinking. CGC concluded that our incentive compensation programs are designed with the appropriate balance of risk and reward in relation to our overall business strategy. Overall, I can believe them. It seems fine. Nothing too egregious. Now let's see it all together, for real this time. So Charles M. Schafer had a base salary of $959,625 with a total of $367,417 total. Nice. On the other hand, you have Tracy Dexter with $417 total. Nice. On the other hand, you have Tracy Dexter with $475,000 salary and 1,001 leave that job. Polstry Thos and on December 10, 2021, the company and the bank entered into a supplemental executive retirement plan agreement with Mr. Schafer and only with him. It's a retirement plan for executives. How nice. The company and the bank currently maintain employment and change in control agreements with certain executive officers of the company, which are like parachutes if the company gets acquired or something like that. They want to increase authorized common stock. The company can issue more shares of stock in the future, which can be used for acquisitions, stock dividends, or other corporate purposes. This gives the company more flexibility. This is the key point now. They are asking shareholders to approve an amendment to the 2021 plan. This is because in order to ensure the payment for the executives and the long-term planning of the company, more shares need to be authorized. They are requesting for the next 3 years to add 2,000 shares. That represents a small percent of the total shares outstanding. With all good corporate governance, they do not reprice options or give dividend on unearned awards. All those are really good to consider. They are thinking about risks and long-term plans for the company and its shareholders. So what's the story here? Seacoast Banking Corporation is presenting a picture of a stable, well-managed company with a strong focus on growth and shareholder value. They're making strategic investments, managing risks, and keeping their executives happy. But we should take these conclusions with a grain of salt. Executive compensation is always a hot topic, and while Seacoast's pay structure seems reasonable, it's important to ensure that these incentives truly align with long-term performance and don't encourage excessive risk-taking. There are some things that may need attention. All that said, it's looking like a company worth keeping an eye on. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. Let me know in the comments what company you want me to decode next.